Greetings, my YouTube family. Thank you so much for visiting my channel. Today, I'm going to review one of the stocks that have been making the headlines called Supermicro Computer Incorporated, SMCI stock. So essentially, before I get started, I'm going to share with you that this content is meant for educational purposes. As such, it should not be taken as investment advice. Now, I'm going to, briefly share what SMCI as a business, what they do, just, touch on the earning highlights, like the next earnings that they are going to release, and then do a quick financial analysis and also review whether I would invest in this particular stock and give my conclusions. But for those who are new, my name is Isaac Jonas, and I like, creating content like this for investing in personal finance. But I'm pretty much an economist by training. But going to the business of the day, SMCI actually, what they do is they provide high performance server technology services to cloud computing, data, and big data, high performance computing, and Internet of Things. So basically, it's in the artificial intelligence sector, and they provide servers. I'm going to take this to just highlight server, storage, blade, and workstation. So you can pause this and just see what they do in full. But basically, they are in the artificial intelligence sector. But what I find interesting in this business is that half of the firm's revenue is generated in the USA. So in the United States, there is quite a great deal of buyers, right? But also there are also they have customers in Europe, Asia, and other regions, which is very good that they are diversified. Now, when I look at this stock for a glance, I recorded this on the 7th of March. So it had hit the year low of $87. It was just $87.25, but now it has surpassed this. It was 1115. So it has really gone up. You can see on this graph that it went all the way up. But what I like is that their return on invested capital is almost 31%. Return on equity is 32.45%, which is fantastic. So at a glance, these are very interesting things that I look at. Now, their earnings, when they released their earnings December 2023 for Q4, I believe they did beat the earnings and expectations, and then hence their share price, it started just increasing, and also the talk of the artificial intelligence sector. So they had a revenue of 3.26 as expected revenue, and they reported a beat of 12.49% for at 3.66 billion. And their next earnings are going to be reported around April 29 and May 2024. It's to be confirmed. So this estimate is based on historical debts. Now, when I invest in a particular stock, I like to understand their financial situation. So the first point, I go to the income statement, right? So I will be looking for the income, net income. So I checked this from the toolbox that I use, rule one toolbox. I pay actually for this, but it centralizes all the information. But you see that the net income here, they've been making profit actually. So this is good, and it has actually increased. Recently it was 720 and 32 million that they made. So this is good, and it has been on an upward trend. So that's the first thing. And then I go to the balance sheet, and on the balance sheet specifically, I'll be looking for the long-term debt. You see here, they didn't even have long-term debt. Here, the long-term debt has been increasing to 99 million. Now, for a big company like this, it's not really much of a concern, but I would also then even go further to check the cash flow, free cash flow statements in the cash flow statement. So I go on the free cash flow, on the cash flow statement, I look at the free cash flow. They have not been consistent. For me, this is a red flag. You see here, some years they, 125 million in the red. They didn't have enough free cash flows. So I like stocks that are consistent. So for me, this one is actually a concern, actually. So that's what I do. And before I even, consider going further, these are the things that I look at. And of course, I do, even a deep dive. But I also go on the inside trade to see if they are, you know, buyers or sellers in terms of the insiders, mostly the directors. I saw here that they were not really selling, but it's not uncommon for, directors to sell. But I like if they are buying, right? If they are purchasing shares. I didn't see that. I only saw some sales. So for me, that's something that is interesting. Now, when I also look at other big funds, I also check and I see here this fund manager, this fund, Fred Martin Discipline Growth, they actually exited their position. So they are actually selling. So for me, that's something that I look with interest because maybe they made their profit. Imagine it was like at $82. Now it's almost, maybe they sold when it was almost 500, 600. That's a lot of money. And when I look at the competitive, advantage of the business, I look at other competitors. They have Arista Networks and all these other businesses, but the other company that is actually strong is Arista Network in terms of the MOAT, management. They manage their funds very well, even better than SMCI, right? In this regard. So for me, but it's still good. Good. It's not bad. Now, when I consider investing in this stock, it has a good moat actually, 90%, in this particular sector, which is good according to the toolbox that I used by Ruhan, which is good. And then they have good management. Their finances, even though their cash flows, they are not that consistent in terms of the free cash flows, but they are good. And then the sector, artificial intelligence sector, a lot of people, they are focusing big things. It might not be the reality, so that's why I am very cautious. But the good thing is SMCI will be joining the S&P 500 index in June this year. So this is good because fund managers will be forced to buy this by law. So this is in the US. So what happens is that it becomes even more liquid. Now, in terms of the risks, I believe currently it's a little bit on the high. I like to buy the stock when it retraces. So if it retraces to about 700, I might want to start buying some shares. Today, when I added this part of the presentation, it was March 8, it was trading at around 1,136 when I took this. So it's high up, but it had dropped a little bit today. But usually there are events that happen in the market that sometimes it drops maybe by even 10-20%, and then that's when I like to buy when it pulls back. But it's on my watch list. I'm not really um, particularly happy with their way they manage their cash flows, but I think this is a stock to watch out for. But I'm going to just wait and just see, because I did a review for Palantir. I think Palantir is a much better stock for me because I'm a retail investor and the share price is also reasonable, right? It was like $26 today when I recorded this. So they are also profitable, these ones, but they are, in the league of, like those big companies. So that's what I thought I would just share this with you. This is a very interesting company, SMCI. In terms of the long-term fundamentals, their free cash flow is my concern, but they are making profit. Their net income is good. And if I look at other indicators, like a long-term debt, it's good. I would do a deep dive into their liquidity ratios and also look into the filings, to see what's really going on in the business before I make an investment. But right now, it's priced at the top. So please, if you have come this far, please consider subscribing to this channel so that you don't miss when I release content like this in the future. Thank you so much for the support, and may the markets be with you. Have a wonderful